Hello nieces, hello nephews, it's your Uncle Chiddy here and welcome back to my YouTube channel where we do unbiased price action analysis. And we got a false breakout setup heading into next week, y'all. Remember, on Thursday we had the breakout above the 50% fib level at 414, okay? Yesterday, zoom in here, you guys can see we closed back below that Fibonacci level, including this rising wedge. We closed back within the rising wedge, so that is technically speaking a false breakout setup. And as you guys know, that is a bearish setup. And in today's video, like always, Uncle is going to talk about how I traded yesterday and give you guys the bull case scenario and the bear case scenario so that I can simplify this for you guys from a price action perspective. Let's prepare. So as far as how I traded yesterday, very simple. You guys know my trading system, at least I hope you do by now. I long the breakouts of resistance and short the breakdowns of support using the 15-minute chart. You guys can see here on the 9:30 candle, SPY opened at 411.63, which meant 412 was my first resistance and 410 to 410.5 zone was the first support. And SPY opened up with a breakout of the 412 level, gave us a very nice level-to-level move above 412. I had the fib level of 414. Okay, I missed this trade right here. I missed this entry because I had to do something early in the morning. But when you miss one entry, you just look for the next one, and boom, SPY right there. That's where it cleared the 414 level, the 10 o'clock candle. That's when I looked for calls. Did I know it was going to keep going up? I did not know. All I know is it cleared a resistant level. And when a resistant level clears, that's when I look for calls. And it worked out beautifully. It hit the next price target at 414.5. That is when I look to take profits. I play level to level. And once I take profits, I don't take all profits. I take 75 to 90% profits. So I take most profits off the table. Leave a runner, and the next target I had above 415.5 was 417. SPY came within a few cents shy of it. I did not let my level, the shortness of the level, because it's been getting me lately, but this time I did not let the price coming up short of the level stop me from securing profits. It got in a few cents. It got close to a few cents of 417, 416.8. I just started looking to take profits. Boom, moved up my runner. And it got stopped. I got stopped out around 11:45. I only took one trade yesterday. You can see here, it broke down. Looked like it was a false breakout, but then it recaptured, faking people out, only to give us another breakdown of that 415.5 level. And from there, SPY dropped as low as 412, where it just based, consolidated at 412. Does not look like strong buying pressure, but nonetheless, going to the daily chart, zooming out, you see we got the false breakout setup. Okay, so as long as the false breakout setup holds, I would stay bearish heading into next week. Okay, that means as long as SPY is below 414, I recommend you guys staying bearish. Look for the breakdown of the next support level. All right, the next support level is at 412, and of course 410 to 410.5 zone. That is the December high. That's very, very critical level. If that level or zone fails, that will be another good entry for puts, in my opinion. And then as long as below 410, that will be a big false breakout setup right there. Below 410, I would favor more downside. 408.547 and 405 would be in play. 405 is support of this rising wedge here. Breakdown of 405, I would favor a back test of that yearly trend line from January of 2022, and that's around 400. Okay, below 400, we would break back below the yearly trend line. That would be very, very, very bearish. Okay, guys, so as long as below 414 next week, I recommend staying bearish. You guys got my support level. Look for the breakdown of the next support level. Okay, now as far as the bull case goes, SPY just need, if it goes and back tests the December high 410, 410.5 zone as a support, That needs to hold. Okay, we cleared that December high back in February 1st. You guys can see here on the daily channel. We have not yet to back test that breakout level as a support. So it remains to be seen if we're going to get the roll change or not. So remember, December high was resistant. We clear it. Now it's support. So we want to see it get tested as support. If it holds or if it breaks down and then recapture, giving us a false breakdown setup, I would look to long, okay, and watch if it can clear some resistance. I would definitely be a lot more bullish above 414 because above 414 it would cancel the false breakout setup. Okay, so the bear case is to stay bearish as long as below 414 playing this false breakout setup. But if it recaptures, that means that setup, the false breakout setup, is canceled. So we could possibly see more upside above 414. I have 415.5, 417, 418.2 to 0.5 zone, with 420 above that and 422 as the gap fill. Okay, we do have a gap around 422, all right? So you guys got my levels. You guys got the bull case and the bear case. It's up to you guys to stay unbiased when the market opens, okay? Remember, stay bearish below 414. Get more bearish below 410. Switch back to bullish if 414 recaptures, okay? Switch back to bullish if price breaks down 410 but then recaptures, giving us the false breakdown setup, okay? If and then statements. Why? Because we're trading with logic, not emotions. And here is QQQ. It tested that Fibonacci channel line on Thursday. It got a strong rejection from that Fibonacci channel line yesterday, okay? So if bears want to show follow through, they'll need to break down the 61.8 fib level, which is at 303.8. I would swing puts below 303.8, targeting 298. Below 298 would put 294.3 back in play. Below 294.3 would be very bearish. That is the 50% fib level. So if that level is lost, that would be a massive false breakout. Put in 290 and 285-ish back in play, okay? So yeah, that's the bear case. It'll continue if 303.8 can fail, all right? To be bullish, it needs to clear some resistance, starting with 306.7, 311, and 311 to 312 zone. If 312 can clear, 313.6 and 317.3-ish would be back in play, okay? IWM, we're consolidating here on IWM. After a big drop, big run up, not a drop, big run up, decent run up, consolidating, okay? So you guys can see here we have an inside day candle on the daily chart. Okay, this candle right here, the high and low is within the range of Thursday's candle. So that's an inside day candle setup. The way we trade this setup is to see if Thursday's candle can be broken, whether it's the high or the low. So the high for Thursday's candle was 199.2. That is resistant. If 199.2 clears, look to long, and that will put 202 and 203.5 in play. Okay, there is support at 195.5, and the low of this candle is at 194.3. So if that level fails, look to short 193, 191.5, 190, and 187.5 would be back in play, okay? Tesla, big run up on Tesla this week, okay? If Tesla wants to continue to defy gravity, there is resistance at 193. Needs to clear 193 to put 199.2 and 207 back in play, okay? If Tesla wants to switch back to bearish, there is support. Let's see, there's support at 187, 184, and 184 and 180.6. Okay, I would swing puts below 180.6. That would put 175.6 back in play, below 175.6, which is a critical Fibonacci level. If that level's lost, it would be very, very bearish, putting 173, 169.5, and 162 back in play. Okay? Apple, a lot of people thought Apple was going to be dropping, but Apple was like, nope. And it gave us an outside daily candle. Okay, so there's support at 153.5 now. Okay, 153.5 is the 50% fib level from all-time high down to January low. Okay, so if 153.5 is lost, look to short. That will be a false breakout setup. Targeting 151, and there's a gap fill around 146.5-ish. Okay, as long as above 153.5, stay bullish. With next resistance at 155, 157.5, 159, and 160.5. Okay, let's take a look at some inverses. So while the SPY gave us a false breakout with some bearish setup, DXY is exploding to the upside here. Okay, and it hit that 103 level. Okay, if it could stay above 103, the next resistance at 103.5 and 104.3. Okay, there's support at 102.6. If that level fail, the XY could be heading right back down to the 101.5 and the 100.8 support level. Now, VIX had a false breakdown setup on Thursday, and as far as Friday go, it didn't show much upside for Friday, but it still managed to bounce off that 18 support level. So the false breakdown has not been canceled yet. If VIX does drop below 18, then that setup is canceled. Okay, but as long as above 18, I need to see 19.5 support resistant level clear with 20, 22, and 23.5 as the next resistant level. So clear that 19.5 and 20 resistant level. Maybe we can see more upside with VIX and possibly more downside with the SPY. But definitely watch out for that 18 support, because if it goes, we could possibly see more downside for the VIX. Okay, let's take a look at the option flow. Okay, 97% into puts. It's filtered for 500K premiums or above, guys. You can see very aggressive plays here. Now, this one is 420 strike price, but it's February 24th, over 7,000 in size, 7.6 million in premium. That's puts. Another one that sticks out, 14.8 million in premium, 24,000 in size, sweep orders. Puts for 395 strike price. That's very aggressive. Okay, we got another one here. Sweep order, 1.3 million. Over almost 8,000 in size. 395 strike price for some puts. Okay, so big money is looking to short here. All right. Let me see. Expiration date for 1 month out. Okay, so yeah, that's overall, bearish as well. Expiration date for 1 week out. Yeah, that's 100% in the calls, but 413 strike price. Maybe they cashed out already. But I like to take, just filter for 500K premiums or above. That's what I like to see, okay? But yeah, overall bearish. Triple Q, 92% in the puts. Also very bearish. If people want to see the shorter term, it's 1 week out, bearish. 1 month out, bearish. Okay, for Triple Q. IWM. Here we go, 100% in the puts. Okay, so aggressive puts. It's February 6th. Come Monday, 197 strike price. All right, maybe they cashed out already. But this one, March 17th expiration date, is 185 strike price. Okay, so you see big money betting to the downside for IWM as well. Here's Tesla, 73% into calls. That's very interesting, even though it's mostly calls here. Yep. Yeah, we're seeing some aggressive plays. Like, look at this one, 250 strike price. Wow, for February 17th. Okay, you guys see this? Very aggressive plays. This one is a sweep order, though. Sweep order for puts. 6,000 size, over 8 million premium, 200 strike price. So in the money puts, it would have been a lot more better or aggressive if it was out the money. But we are seeing some very out the money calls, guys. That's what big money is doing. 70% in the calls as well for Apple. Okay, you see big money looking to bet to the upside, putting big money. All right. And last but not least, the VIX. Here's the VIX, 78% in the calls. So interesting. See big money's betting to the up. Well, they're getting in calls. Here's a 35 strike price. That's interesting. For March 22nd, though. Okay. So there you go, guys. I hope you guys found value in this video. If you guys want more content from Uncle Charters or need more help navigating this market, please consider joining my Discord. I would love to serve you guys at a higher level. Other than that, have a great weekend. Stay warm. Peace.